So we have an emergency upload today as we have some big news with SoFi going down this week that we have to talk about because I'm hearing a lot of chatter that we need to clean up today and get you the truth on exactly what all happened because it was a huge week. So a lot to get into today. Gonna have to push my video off that I made today till next week, whatever the case is. But just make sure you like the video if you like getting the truth off the hype, because that is exactly what you're gonna get today, guys. And unfortunately, it's going to make a few of you guys out there mad. I'm sorry, but that is what this channel is all about. Now, to be clear, guys, this doesn't make me a bear, just a prudent investor who gives you guys the truth. I'm sorry, but blind bulls are just as bad as stupid bears. So that's why we deal with truth in here. Now, like I said, actually I had another video loaded up and all ready to go today, but since I'm out of town for meetings, I'm leaving for meetings again. So this news broke. All this stuff kind of happened on Thursday and Friday and kind of messed everything up. So I figured I would delay that video and give you guys this video instead. That's why it's kind of raw, not a lot of edits, not a lot of graphics or anything else like that. Again, apologize for any mistakes that I make or any misspeakings or misspellings or anything else of that nature. Just wanted to get this out to you guys today, which I guess since I changed the video order last minute, the Cyber Week sale from my group doesn't end today like the other video said, but actually Tuesday, where you can lock in that price for as long as you stay a member before the price goes up next year. It's the pinned comment down there for those of you guys interested. We'll talk more about it at the end. So if you like getting even more unfiltered truth in real time, like I gave to my group Thursday and Friday this week, and you want to actually learn, then that's the place for you. But let's start with the first controversial take here, and that would be the public offering of more shares. Now, as I posted in my group when the news broke, I think this is good and I love it, guys. Despite all the ridiculous narratives out there in the retail investing crowd, I really think this is an awesome move. Now, I cannot share the rant that I gave my group members there here on YouTube. It's not appropriate and it's meant to be kept private in there. But here's the bottom line with a lot of this sort of stuff. I don't care about fireside chats or, what he said on CNBC or whatever the case is. I care about what is said on earnings. So I don't complain about anything else that's said. Was he supposed to ruin the raise announcement on the fireside chat by basically saying, oh yeah, hey, we're planning on raising on Friday, right? Is that what he was supposed to do? No, that's silly. You can't do that. But more importantly, we talk about it all the time right here on this channel and in my group and everywhere else, any interaction I have with you. I don't care about anything that's said in any interview, any release, any sort of, oh, here's our presentation on this or fireside chats or anything else. Don't care. The only time what they say matters is on earnings. That is where they can legally be held liable for what they say, right? You can go on CNBC, say whatever you want. You can tweet a lot of different things within reason and get away with it. But in regards to what you say on earnings, that's what matters. That's what I listen to in the end. Management has done this before. They just did it, right? Just a few months ago, they did this exact same thing. And guess what happened? It boosted EPS and it improved the business overall. Exactly what you want as an investor, despite the quote unquote dilution. Retail loses routinely because we follow social media narratives like management didn't tell us to plan up front, so I don't like it. They could be misleading us. They're lying to us. That's why we lose as retail investors overall. Now, notice Wall Street didn't really care, right? They priced in the dilution, which we expected. It was also a down day that day whenever that happened, so it kind of exaggerated the move a little bit, and they moved on. I haven't heard any Wall Streeter out there saying, well, this is just unusual. They didn't tell us what they're using this money for. They're not discussing that at all in regards to SoFi. They're not saying they didn't tell us what it was for. And on the fireside chat, they said nothing was coming. And then the next day they did. And so therefore, I think it's bad and I'm getting out of SoFi. My bull thesis on SoFi is out. I'm really questioning the management team now. I haven't heard that from a single Wall Streeter out there. But us as retail, I've heard it a lot across the board, even from some really, really good folks who typically are very level-headed. Have kind of questioned what's going on there. So nobody cared except on social media, and now many retail investors care as well, and it's why we lose routinely as retail investors. It's not Wall Street screwing us. That's not the number one reason why we lose, although they don't help us, right? It's us screwing ourselves by listening to stuff like that. Let me give you a quick example here. Just in April, Noto was a bad CEO and behind Robinhood, because that's what was said on social media, because Robinhood made a few great announcements for Robinhood, really had nothing to do with SoFi. And of course, Robinhood ran on the news. SoFi was in the middle of a downtrend that really the entire stock market was in. And it went all the way down to $9, right? And guess what? A lot of folks didn't buy the dip at $9. Some folks even sold. as it was going down because of that narrative right there. That was absolutely silly. 100% made up by retail. Retail social media made that up, that Noto's a bad CEO, and a lot of folks bought it and either sold out or they didn't buy the dip at all, or they didn't buy as heavy as they should have because they had questions about the management team, which was 100% manufactured by retail social media. Now, I agree with you guys. Yes, it's dilution, but it's paying us more money in the end when it's all said and done. That is how you grow a company. Dilution is how a growth company grows the business, guys. And I posted this to my group. I'll give it to you guys right here too. Look at the first 5 to 10 years of the Magnificent Seven stocks, right? Massive, massive dilution those early years. 5 to 10 years, right? SoFi's only really 4 years, I guess you could say almost 5 into their journey right now. Massive dilution. Guess what? You got 100,000+% returns on those stocks, hundreds of thousands of percent returns on those stocks, right? So clearly, dilution isn't all bad. It's how you grow a business. It's why you go public. Now, me personally, I trust this management team to use the money to improve the business because that is what they have done routinely from the start. Without fail, they have done the right move every single time. More importantly, it shows us, you and I, that they are willing to potentially hurt their own bonuses in the short term to benefit the business long term. That's what a great management team does. Not pump the stock price to unreasonable and unsustainable levels just to get a bonus and make some of the pumpers out there happy. That's not what a great management team does. They're willing to sacrifice short term for that long-term vision, although I think it'll pay off earlier than that, but it is a risk that they're taking there in regards to maybe not hitting their bonuses and all those other sorts of things ahead of time. But clearly they're not concerned with it at all. That's a whole different conversation for a whole different time. We're not going to have that one here. So for me, I'm excited to see what they do, and I think it's a great move. But let's move on to the second piece of news and the second controversial take I'll probably have, and that is SoFi not getting into the S&P again. Now, here's the controversial take right here, guys. There are some of us out there that think this is an actual long-term catalyst and it adds something to the valuation of the stock, which is simply not true at all, guys. Now, short-term boost by traders trading it? Yes, absolutely. But you don't get a boost in your multiple because your stock is now in the S&P. I'm sorry, you just don't, right? Just like you don't magically get more profitable because you're in the S&P now. That doesn't happen, right? You know, it's not like you enter the S&P and they go, hey, here's a bunch of money, right? Doesn't add to your revenue that I know of, right? I mean, that'd be great if you get into the S&P, they give you a bunch of money. That'd be awesome. But doesn't give you more revenue, doesn't improve your EPS. Your margins don't magically get better. Nothing tangible happens to the fundamentals or the business. So beyond the trading bump, which is a very real thing, guys, which, by the way, if you're significantly overvalued, you're coming back down to fair value at some point in time, regardless of the trading bump or not. The only real thing that it does is create more institutional owners that have to hold and can't trade it, creating a more stable shareholder base over the long term. Remember, I'm talking about long term here, guys. Short term, right, traders are going to trade it. They know they're going to try to get ahead. Remember, these funds, it's not like, hey, S&P day happens and all of a sudden all these funds have to buy that day. Some of them build out their positions ahead of time. Some of them they take a year to build out their entire position into SoFi because they're in the S&P. Some of them it's quarterly, all different types of deals. So it's not like this mad rush. The mad rush is retail and the hedge funds all playing games with the stock. Well, maybe retail's not playing games, but the hedge funds are definitely playing games and preying on that sort of stuff. The other thing that it does is it takes more shares out of the traders' hands and then into the long-term buy and hold investors' hands, which that means less volatility for us over the long run. Now, it doesn't mean all volatility is gone and SoFi is going to go from trader controlled to institutional controlled, but it is less volatile for sure. And it definitely is a big jump in taking, shares out of those trader hands over here into the long-term buy and hold investors' hands. So it's kind of the big first step into that shareholder base becoming more, long-term buy and hold investor controlled and less trader controlled. So it's awesome from that perspective. But the idea that it adds to your market cap or anything else, guess what, guys? Most companies that are getting added to the S&P, they're already on a massive run. Their businesses are clicking on all cylinders. The stock price, most likely over the next 2 years for SoFi, is going to go up regardless of whether they get in or not. Not going to matter because they have improving fundamentals. The margins are getting better. Profits going up. EPS is going up. More revenues coming in each quarter. Like, that's the reason why. You don't magically go from, Wall Street thinks you're trading at a 50 multiple, but now that you're in the S&P, now you get a 75 multiple, right? That's what happens. That's literally what you're saying. If you're saying getting into the S&P matters over the long run for a stock in regards to valuation, is simply not true, guys. I'm sorry. No, it's a little bit controversial here, but that is the truth without the hype. And if you want that daily type of content, daily videos, be able to talk about that directly with me, work directly with me to learn valuation, learn how to not buy hype or not buy fear, but to actually buy the dip properly, be ready for the next downturn that is coming at some point in time. Take advantage of the Cyber Week sale that was supposed to end today, but it actually ends Tuesday or whenever the next video releases, where you get access to myself personally to discuss that through our live Q&As. Obviously, we got courses, we have coaching, we have the best 6, 7, and 8-figure Discord out there helping you become a better investor. Check it out. It's the pinned comment down there. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.